Hello, everybody. I'm Adam Bergman, founder of IRA Financial, tax attorney. Got a great webinar for you today. Really excited for everyone to join. We are going to talk about how we can all build real wealth with a self-directed IRA and 401k. But the truth is bolder. I mean, a self-directed IRA is how wealthy, smart people get richer. It's as simple as that. Okay, rich people and super rich people don't just stay in Wall Street. Okay, they move beyond it. So the smart money really uses a self-directed IRA. The wealthy grow their retirement their way. So it's really the truth. Unfortunately, it's hidden from most Americans. If you look at the Forbes 500 list, you're going to see the top people on it are involved in alternative assets, whether it's private businesses, whether it's hedge funds, venture capital funds, private equity funds, cryptos, right? So why shouldn't all of us have that opportunity? And we can. The beauty of the self-directed IRA, the beauty of what it stands for is that Congress has given all of us the power to get rich using alternative assets. So that's what today's webinar is going to be about. I'm going to go through the basics of self-directed IRA, 401k, why alternative asset investing is so attractive and so important, honestly, and why it's used by the wealthy to grow their wealth. Okay, and really the heart of this webinar is introducing the whole concept of alternative asset investing, explaining how it's not scary at all. It's easy and simple, and how millions and millions of Americans are doing it. Unfortunately, it should be tens and tens of millions. Okay, so that's my sole passion and my true goal in life is to get more and more people to at least understand that this opportunity is there, that Congress, when IRAs were created in 1974, gave us all the power to diversify and invest in different types of assets. And we have the ability to do so. Whether you want to or not, that's up to you. But the beauty of the self-directed industry is it gives you the freedom and flexibility. So again, this is how the rich get richer. And they don't stay and invest in one lane, right? They diversify. So you guys know me. If you don't, I'm Adam. I started this company 15 years ago. We now have over 27,000 accounts, almost 5 billion in assets. And we've probably done 150,000 plus self-directed investments. If it's done, I've done it. I don't think anyone knows this stuff better than me in the whole space. Not just because I spent the last 15 years doing it. No, because I have a law degree. I have a master's in tax law, and I've worked for 8 years at some of the largest law firms in the world practicing tax law. Okay, I wasn't a corporate litigator. I was actually a tax lawyer. So I think with my pedigree and my experience and expertise and my team behind me, IRA Financial is the leader in the self-directed space. And I think the 27,000 clients are the smart ones. And hopefully you guys will feel the same way, that there's no one better at doing self-directed IRAs, but not just setting them up, but also helping you along the way, being your partner and keeping your investment in good standing and tax efficient, and making sure that you don't have to deal with all the tedious IRS stuff. We'll handle all, and you get to do what you do best, which is invest and focus on building wealth. We are offering a great Black Friday promotion. Happy Thanksgiving, everyone. You get $200 off your first year with the promo code Black Friday, all one word. So definitely take advantage of this. Offer ends November 30th. We want to get more people interested and excited about self-directed investing. So agenda, it's going to be around 30 to 40 minutes. We're going to talk alts, the importance of diversification, inflation protection, how to invest using self-directed IRAs, 401ks, the advantages, tax advantages, which is what really excites me, because as a tax lawyer, there's nothing more exciting than investing without tax. So that's obviously why I got into this space, because it resonated with me more than anything I was doing, because where else could you invest and you don't have to worry about limiting your gains, but you can actually erase all the tax associated with that investment. So that's why I love investing through a retirement account. Okay, so let's tackle the first question. The problem with traditional retirement investing. There's approximately 65 million or so IRAs out there, around 17 to 18 trillion dollars in IRAs. Okay. The majority, if not all of us, are overexposed to Wall Street, meaning most of our assets, whether they're in a retirement account, IRA, 401k, or personally, are tied into Wall Street. And that's good, but you want to be diversified. You want to have opportunities in different areas. Why? Just makes sense, right? If you put all your money in one bucket and there's something that happens to that bucket, you're at risk of losing a considerable amount of money. So if you talk to any smart investor, they're going to tell you that you want to diversify. You want to have assets in stocks, of course, but you also want to have assets in different types of asset classes like real estate or gold or cryptos or private investments. It's not me. If you look at Larry Fink, who's the CEO of BlackRock, the largest asset manager in the world, he recently said that he thinks investors should have at least 30% of their assets exposed to alternative assets, right? So it's not just me. Jamie Dimon feels the same way, the CEO of JP Morgan. This is what smart people do. If you put all your money into the S&P 500, literally every dollar, you're overexposed to Wall Street. You're going to have some good years, you're going to have some bad years. But overall, it doesn't make a lot of sense. It's way too risky. So thankfully, this is one of the reasons IRAs, when they were created, Congress gave us all the power to diversify. They could have said, hey, you know what? We don't want you investing in real estate or alts because we think it's too risky. But they didn't. They understood the power of diversification. And kudos to them all the way back into 1974. So for the last 50 plus years, we've all had the power to diversify. Unfortunately, we're still overexposed to Wall Street, which is the power of the self-directed movement, why millions of Americans are understanding the power to diversify. We saw it recently with the President Trump executive order for 401k plans to have more exposure to alternatives. The issue with that, without getting sidetracked, is that there's still litigation risk, right? So there's some potential legislation that could hit Congress to try to limit the litigation risk to companies that allow their employees to do alts. And the litigation risk associated is, hey, if my company let me buy Bitcoin with my 401k and it goes down, and my company is a fiduciary to my 401k plan, did they violate their fiduciary duty? And now you're going to get lawyers that are going to sue those companies. And what the executive order does is says, okay, we agree that there is this importance for diversification. So we agree, we're going to state that for the record. But if you don't limit the litigation risk, no companies are going to offer alts. It's just too risky for them. So there is some legislation that's going to hit Congress soon. It's kind of making its way in the congressional hall, but I'm not sure it's going to pass because the litigators have way too much power, especially in the Democratic Party. So we'll see what happens. But the executive order is great, but until we reduce the risk of litigation in 401k plans, nothing's going to happen. So the beauty is with IRAs, you control it. You don't have to deal with your employer. And that's why there's so many more IRAs invested in alternatives, because you, whether you do a self-directed IRA or an LLC or solo K, with a true self-directed account, you have the power and you could invest in stocks and also alts. So you diversify, you get to have flexibility, you get to protect your assets from inflation by buying real estate or different types of hard assets, and you're not going to be trapped in a system that's limiting your investment options. So why alternative assets? I mean, listen, if you want to generate greater wealth and get richer, you're going to have to diversify. Okay, it's just the bottom line. If you want to generate real returns, you have to have exposure to assets like real estate or private placements or private equity, hedge funds, venture capital. If you put all your assets in fixed income or stocks, you'll probably do okay, but you're going to miss the alpha, right? The real juice that's going to juice your returns and make you rich. And that's what the self-directed industry does. We don't want to take away the traditional investment market. We're not fighting with Schwab or Fidelity. What we're doing is complementing them and saying, hey, there's nothing wrong with having stocks or fixed income or S&P 500 ETFs. I have them. I think they're great. But you want to diversify, right? You want to go beyond public markets. You want to earn stable long-term real returns. You want to reduce your exposure to volatility. And you want to also have fun and invest in what you know and understand. Okay. And I like investing in startups, private placements. That's what I like. I get off researching this stuff and doing diligence on these private businesses. Of course, I still invest in NVIDIA and Tesla and Apple and Google because you have to. but I take a percentage of my retirement portfolio and also my personal portfolio, and I invest in private equity and real estate and cryptos. In fact, my two best performing investments, and I said this before, are Bitcoin and an investment in a startup. I 10x my investments on both ends, if not more. So I still have done well with the equity markets, but without those two private investments, I would have had, and I would have a lot less money. The power of diversification, obviously, we all get it, right? You don't want to put all your eggs in one basket. It's crazy. Alternative acts as a buffer when traditional markets drop, right? When the markets go up, great. But when the markets go down, you want to have exposure and protection. Real estate gives you that protection. Private equity, because the longer term horizon, obviously gold, cryptos, although there's been more correlation with Bitcoin in the markets lately, but especially metals, private equity, venture capital, because you have a longer term horizon of 5, 7, 10 years. So if you have a down market, you're still investing in great future American leading companies. And by having that exposure to private equity and venture capital, you're not going to really be restricted and limited and feel the power of the downside market. So you have to be diversified. I'm more of like a 70-30 / 60-40. Some people are like 80-20. I have some friends that are now 50-50 in alts, and that's something you can talk to your financial advisor. IRA Financial, the good news about us, we don't promote investments. We don't pump investments. We're your partner. We're totally agnostic and neutral to your investment. We just want your account to go up. And guess what? We don't charge more when your account goes up. It's a flat fee system. So we just want you to do well, and we want you to be happy and diversify and take control of your future, because you don't want to count on the government. And if you just focus on stocks, which has been relatively strong for the last 10 years, I'm not confident in the next 10 years that's going to be the case. So I am a big proponent of diversification into assets like real estate, gold, cryptos, and private investments. The hedge against inflation is real. We all know whether the government's telling us we're at 3% inflation, like that's BS. It's probably more like 7 to 10%. We all go shopping for food, whether you're buying bananas, steak, coffee, like everything's ridiculous. You can't get lunch for under $20 these days. So I don't care what anyone says about inflation. It's real. And if you buy assets like real estate or gold, commodities, you're going to be protected. Real estate's done really well. And if there is inflation, your real estate's going to go up in value, guaranteed. So it's going to help you preserve wealth as we enter and continue to enter this period of inflation. And that's something that's real and something that's important. And then the last thing is, as I mentioned, you're going to tend to be a better investor if you invest in things you know and understand. It's just natural that you're going to do better when you are actually interested and care about what you're investing in. So, of course, like not everyone's going to read the quarterly reports from the publicly traded companies. I don't, right? So it doesn't make a lot of sense too. But I know I like following, as I mentioned, private business investments, private equity, venture capital. I like understanding what these funds are investing in, their models, and the companies they're investing in. That's interesting to me. I don't want to put all my money into private equity, but I think it's important to have a percentage. Now, you may like venture capital, you might like investment strategies through hedge funds, you might like cryptos, you might like gold, but having a sprinkle of those assets in your portfolio, I think will make you a better investor, will teach you, and I think you'll be a richer and more successful investor. So what's popular? Okay. Real estate's the most popular. It's been since I've been in the space over 15 years. Second, I would say private investments, whether it's private business stock, investing in your friend's startup, private equity, venture capital, non-publicly traded businesses, okay, which people like. Eventually, those businesses hopefully will go public. So those are the top two. I would then say private lending is very popular. And if you're going to do lending in an IRA, it makes a lot of sense. Why? Because if you do private lending personally, you're going to pay ordinary income tax on the interest return you would receive. Whereas in an IRA, it is tax-free. Then I would say cryptos and metals, I'll kind of cobble them together. I'd say they're the next popular category of investments. Gold's been super hot the last 2 years. And obviously Bitcoin, Ethereum, and then some smaller types of coins like Ripple and things like that have been very popular. And again, I think if you diversify and you have exposure to different assets, you're going to be a better investor and end up having a stronger, more successful retirement portfolio. It just makes sense. If you put all your money in crypto, you may have a good couple of years, but overall, I don't think you'll do as well as if you have exposure to different investments. So now we talk about the fun stuff. How do you actually buy this stuff in a retirement account, right? You want to buy real estate, you want to buy gold. Your friend said, hey, invest in this startup. And the facts are this: most people's wealth is tied into their IRA or 401k. And there's good reason for that. That's how smart people should invest. Why? Because you may get a tax deduction for putting money into a pre-tax 401k or IRA. If you're doing a 401k at work, your company may be giving you a 3 or 4% match on your salary. So if you make 100 grand, you're getting a 4,000 and they do a 4% match. That's $4,000 of free money on top of whatever you're putting in. So you're going to have a good chunk of your savings in a 401k or IRA. So that's the vehicles where you want to actually invest them and generate your alpha. And why alternatives make so much sense in self-directed IRAs and 401ks is the long-term horizon, right? You can't touch this money really until you're 59 plus, whether it's 60, 70, 80, or hopefully you never need to touch it because you're so rich. And then your kids or your spouse can touch it when they want it. But when you're investing in alts like real estate or private equity or private businesses, it's generally not a, hey, I'm going to invest today and in a week or a year, I'm going to 10x my investment. Those investments can take a year, 5 years, 7 years, 10 years. But if you do it with personal funds, you may need to touch that money, right? God forbid there's a medical issue in the family, or hey, I want to buy a house and home prices are skyrocketing and now I got to tap in and use that money. So retirement monies are sacred, and it is the place to do alternative assets because of the fact that you can't touch it for many years in the future. So those are the assets that you want to be able to invest in alts that are going to take time to mature and grow and really nurture into very strong oriented investments for you. So the self-directed IRA and the 401k are the places you want to do alts. Honestly, I do all my traditional investments with my personal money. Okay, so like all my savings, which, I got 2 kids and a wife, so it's not easy to save, but all the savings, everything I have from working and my salary, I'm generally saving in equities. Okay, a little cryptos, but equities. In my IRA and 401k rollover, that's where I'm tackling private businesses, private equity, venture capital, because that's where I got some money to play with. And I don't need the money today. I'm just turned 50. So I have to wait at least 10 years to kind of touch that money, which makes perfect sense. I just got to invest in an amazing private equity fund that I couldn't believe I got into that actually owns some open AI, some chat GPT. And I got to put in a couple hundred grand. I did it in my retirement account. Why not? So IRA, as I mentioned, created in 1974, the most popular type of self-directed vehicles through an IRA. Why? Because you have the most amount of money in there. How does the money get into the IRA? There's around $600 billion each year that come in, 600 million bucks that come in through 600 billion, that come in through rollovers from employer 401k plans. Okay. So you work at, I don't know, Apple, and you go to Tesla, you have money, you then move it from a 401k to an IRA, and now you self-direct and get to do all kinds of fun stuff. So you don't have to worry about your employer, fiduciary risk, your total control. You have all the power and you have the investment flexibility. So the word self-directed IRA is not something you'll find in the tax code. All it means is an IRA that can do alternative assets. Schwab, Fidelity could offer the same self-directed IRA vehicle that IRA Financial does, but they don't. Why? Because they don't make money when you buy real estate. They make money when you buy their products. Okay. Yes, they make money when you buy stocks, even if there is zero commission. They're selling you shares at a premium, right? It could be a penny here and there. They're selling you the share, and that's where they're making the spread when they're making the market for the shares. So don't worry, they're making money on your shares. Promise you. That's why they're doing it. If they weren't making money when you bought stocks, they would not offer them. So we complement the traditional investment market by giving you diversification. So The main benefits of self-directed IRAs is diversification, flexibility, control, hedge against inflation. You get to invest in assets you know and trust. That's how real people build wealth. And all the same rules that apply to IRAs apply to self-directed IRAs, right? There's no difference. The only difference is it's an IRA that is allowed to invest in alternatives. Okay, that's the only difference. When I say alternatives, I mean investments that are not publicly traded, right? Like stock, like non-real estate, private businesses, gold, cryptos, private notes, things like that. So there's two types of self-directed IRAs. You can do a full service self-directed IRA where the IRA is making the investment directly into the real estate, for example, or you can do an LLC checkbook control. And we were one of the first companies in the country that offer these 15, 16 years ago now. And that is an IRA that owns an LLC. You manage the LLC, giving you what's called checkbook control, because you can then write a check to make the investment. The IRA custodian, IRA Financial, is less involved. You have the checkbook control. You control the bank account. You control the process. The LLC gives you also limited liability protection, so protects your assets outside of the LLC, and you have more privacy because the investment's titled in the name of the LLC and not the IRA. The Solo K, it's a great product. I would put every client in a Solo 401k if I could. The problem is not everyone's self-employed. So who can set up a Solo K? You have to have a business. An IRA is an individual retirement account, right? So anyone can set up an IRA if you have some income or if you have a rollover from another IRA or 401k. Solo K, you need to have a business. Could be a sole proprietor, a single member LLC, corp, partnership. The business doesn't have to have $1 billion of revenue, just needs to be a business, right? So you can be Santa Claus, right? And make $5,000 a year at the local mall. That's a business. You're self-employed. You can be a consultant. You can drive for Uber. You could be doing a startup AI company, right? So it has to be a business. No full-time employees other than the owners or their spouses. Full-time employee means 1,000 hours or 2 consecutive years of 500 hours or more. And what the Solo K does is it gives you the same checkbook control as an IRA. You can do the same investments, plus you can actually buy life insurance if you cared. And what you can do is you can borrow. So you can do leverage deals with real estate using a non-recourse loan, which is a loan you do not personally guarantee. And then you can leverage that loan with any other money in your 401k, have more money to spend, and hopefully buy more assets like real estate. Whereas if you did that in an IRA, you would trigger a tax known as UBIT, unrelated business income tax. Don't worry if you become a client or you're a client of IRA Financial. Our team of tax professionals will help you navigate all those rules, put you in the right product, the right structure, the right solution, and tell you exactly what you need to do. Like, I'm giving you all this from an education standpoint. The beauty of what IRA Financial does, unlike our competitors, we don't just take your call or your email and say, okay, yeah, go do any product, pay us, and good luck. If you have questions, go talk to a lawyer or accountant. No. We're going to tell you what's the best product for you, how to structure your investment, what makes the most sense. Should you do a self-directed IRA, an LLC, a Solo K? Maybe you want to do something called a ROBS, a rollover business startup. What are you trying to accomplish? We'll help you, put you in the right solution. We will then do what no one else does, is give you the annual compliance and record keeping to make sure you stay in compliance. And of course, give you the annual consulting. So if you have questions, you call us. You don't have to go pay a lawyer or an accountant. We'll get you the answer. No one knows this stuff better than us. Trust me. So again, the Solo K is a great vehicle if you're self-employed, have a small business. You can put away in 2025. You can put away 70,000 if you're under 50, 77,500 if you're over 50. You can do it by doing employee deferrals, profit sharing. There's also a loan feature that lets you borrow $50,000 or 50% of your account value, whatever's less. You can do alternative asset investing. You get checkbook control, and you also get the ability to use leverage without this UBIT tax. So it's an incredible solution. I've actually written 2 books on it. But if you're not self-employed, you're retired, or you work full-time, you can't jump in it. The beauty, like the self-directed IRA, is it's going to let you gain control, diversify, have flexibility, and hopefully generate stronger returns because you're diversified and being able to invest in alternatives. So here's a nice example. Let's say Stacy uses $150K from her self-directed Roth to buy property. Remember, the beauty from a tax standpoint, what got me excited about self-directed, it wasn't really the investments, to be honest. It was the tax treatment. It was the tax play. The play is the income from the real estate, the rent. if Stacy went to flip her property and sold it, she doesn't have to worry about capital gains. She doesn't have to worry about ordinary income. She doesn't have to worry about holding period, basis. Everything's tax-free, right? She bought it for 150. If she sold it for 150 million, let's say they find gold under her property or they find oil, tax-free. Not a dollar to the IRS, not 1 cent to the government. Okay. This is how smart people get rich. It's like, I want to bang people's head and say, please, like, you have your retirement money. This is how smart people get rich. This is it. People don't talk about it, right? Because why would you want to talk about your secret? But I am, because I have nothing to hide, right? This is out there. And as a tax lawyer, nothing gets me more excited than teaching people the secret. And this has been around for 50 plus years, right? The IRS is put in the tax code all the way in 1974. Just no one talks about it because the big institutions that have the power, and I'm fighting them, trust me, I'm trying to fight them. They're not telling you can do this. They're trying to dissuade you and say, oh, real estate's so risky. Private equity so risky. Venture capital so risky. Guess what? Guess what their executives are buying? Private equity, venture capital, private businesses. Okay, they're not putting all their money in stocks, I promise you. But they want you to because they make money. We don't do that. I don't need all your money. I'm not saying, hey, Stacy, hey, Joe, hey, Jen, give all your money to IRA Financial. You're going to be rich. No, I'm saying we're charging you a flat fee, whether you give us 50K or 50 million. Diversify, invest in different assets. This is what rich people are doing to get rich. You can do it too. And Stacy, in this case, she was able to save 30 to 40% over time and generate tax-free income or gains. What are some mistakes? Okay, there's not many. And the beauty is you don't have to stress about mistakes because if you work with IRA Financial, you pick up the phone, you email us, you set up a Calendly, and we'll go through your questions. We're not going to say, hey, go hire a lawyer, go hire an accountant. We can't help you. No, we're going to get you the answer. So obviously, as I talked about prohibited transactions, you want to make sure that when the IRA or 401k makes the investment, it's exclusively benefiting the IRA. Okay, all the income and gains go back to the IRA. Prohibited transactions are simple. People get all bent out of shape about them, are easy. Don't buy life insurance. Don't buy a collectible like art, baseball cards. And then don't do anything that personally benefits you, your lineal descendants, or any entity controlled 50% or more. So yeah, you can invest in a business you own 10%, 5%, 15%. We'll work with you on those rules. Not tracking expenses or income. I wouldn't stress about that because again, all the income are going back to your IRA. Just don't take your IRA and buy yourself a car with it. And make sure if it's an IRA related expense, your IRA is paying for it. Okay. Over concentration, of course, this is the key to the webinar. You need to diversify and failing to plan for liquidity, right? You need to fix the pool in your IRA home. You want to make sure you got some cash there, or you got to pay taxes, or you got to pay the plumber. So you want to plan accordingly. The good news is you can always roll more money in or make contributions. I talked about prohibited transactions. We don't need to go through the boring stuff. Here are the key takeaways before I get to some questions. Key takeaways are simple. If you want to be rich, okay, if you want to be smart, if you want to do what smart and rich people do, you need to diversify. Okay. I'm not saying use IRA Financial. I'm not saying you need to diversify with your IRA. I'm not saying what to buy. I'm not saying put all your money in Bitcoin or put all your money in real estate. No, I don't care. I don't make money from investments, right? I'm on your side. I'm saying diversify. Have options. Okay. That's how you're going to generate the alpha. The alpha is the juice, which brings a 6 or 7% annual return to 10 or 11%. And I'm going to give you an example and show you why the alpha makes so much sense. Okay. So here's a simple example. Let's say you're 25 years old and you put $4,000 a year away in a Roth IRA. And let's say you just do that to 70, 25 to 70, 4K. No matter what your income level is, you're just going to put away 4K. If you got a 10% rate of return, okay, which is very doable if you diversify, yeah, you'd have $2.875 million. But if you just kind of were conservative, some stocks, fixed income, and you got 6% rate of return, you'd only have 850. Okay. And I'm telling you, 10% is not aggressive when you're diversifying. Okay. In fact, 10% you should probably get in stocks over the last 100 years. The S&P 500 gained approximately 10%. Okay. So if you're just concentrating in stocks for the next 50 or 60 years, you could probably get 9 or 10%. But what happens if I told you with diversification, you can get 15%, which is doable. Okay. Believe it or not, with 15% rate of return, you can have almost $14 million, dollars, a little over 14 million. So to build real wealth, you need to diversify. You need to get exposure to assets like real estate, to assets like private equity, venture capital, private credit funds, cryptos, gold. This is how rich people get rich. Okay. I'm telling you, I've seen it 15 years. I've seen it. I'm not trying to say, hey, I'm not selling you investments, right? I'm not tricking you. And I'm not even saying, hey, diversify with IRA Financial. Even if you say, Adam, I don't care about IRAs, 401ks. I don't have any. Then diversify with personal money, but you have to. Okay, it's just the way you have to do it. And compounding returns, right? I spoke about this, and my example talks about it. Here's a simple example on compounding returns. Let's just say you get 25 to 70, 10% rate of return, and let's say you have a 25% tax rate. If you saved that in a Roth IRA, you'd have $2.875 million. If you saved it with a personal account, you'd have around 1.3 million. So that means you lost $1.5 million because you saved in the wrong account. That's crazy. That's loco. You don't need to do that. You shouldn't do that. That is why I started self-directed IRA and IRA Financial, is because you can do it in an IRA or 401k, and you can generate that extra million plus of gains in this example. And it could be even more if that 10% was higher, right? So that example typifies and explains the power of compounded returns, right? 4,000 bucks a year from 25 to 70, 10% rate of return. You have 2.875 million at the end of the day at age 70, tax free. If you did it in a personal account, 1.3 million. Like, you don't have to be smart to realize you need to save in an IRA or 401k. And then once you're saving an IRA or 401k, why would you put all of it in stocks, right? It goes back to, you want to diversify. Don't trust me. Trust the smart people in the room like Larry Fink, Jamie Dimon, Warren Buffett, everyone that diversifies. Okay. You're here. Okay. The fact that you're here, you're busy. I'm sure you have other stuff to do. Holiday season, Thanksgiving around the corner. The fact that you're listening to me, watching this webinar, shows you care and shows you're smarter than probably 90% of America. Okay. It should be 50% of America. I'll get there one by one. 27,000 accounts. Hopefully I'll have a million in the next 5 years, because there's so much needed out there in terms of education. Americans, we're so smart, but we're busy. And we're smart when we're told the right data. But unfortunately, I went to law school. I did a master's in tax law. That means I took like 30 hours of tax credits of the craziest tax courses, from like international tax. I learned about crazy tax scenarios, subpart F and tax credits and all kinds of crazy stuff I never used in my life. I never took one course on an IRA or 401k. Not one. Not in law school, not in this, and NYU. Master's tax law. I worked for 8 years with some of the largest law firms in the world. Never heard of a self-directed IRA until my 8th year, and I had a client that was looking to use his IRA to invest in a hedge fund. And I got lucky enough, thank God. God bless me. And the partner I was working with asked me to research whether he could use his IRA to invest in a hedge fund. And my head exploded. I couldn't believe. I was blown away. It's like come to Jesus moment, like, holy cow, you can do this? I'm blown away. And I left law, started this business, and the rest is history. But I should have a million accounts. So I give myself like a C minus. The products sell themselves. They're amazing. Self-directed IRAs, 401k, the rollover business startup, like, they're amazing. I didn't invent them, but what I hope I've done is try to make them easy, and then added wrinkles like the checkbook control, self-directed IRA trust, different wrinkles that made it easier, simple, and more flexible to everyday Americans. And what I did is brought the cost down. When I started in IRA Financial 15 years ago, it was almost 3,000 bucks to set up a self-directed IRA. Now you can have one for about 500 bucks a year and get amazing service. Obviously, you get the custodian service, the administration. There's a small consulting fee. We charge under 300 bucks, 299 a year, to talk to tax professionals like me who'll give you the answers, right? Go find a tax lawyer that has any value. They're not going to talk to you for less than 800 bucks an hour. In fact, the good ones are like 15 to 1600 bucks an hour. Okay. For 300 bucks a year, you get unlimited, and you can talk to accountants, attorneys, and get all the answers you need, all the questions you need answered. So I'm telling you, we lose money on that program, but it's important to me. It's like something that I just feel if you don't do it, you're not servicing your clients properly. So let me get to some questions before I keep rambling on self-directed IRAs. Obviously, you can see I love this stuff. I'm super passionate about it. Why? Because I know it works. Okay. I know it works. It's simple. I've seen it over 15 years. I've seen so much wealth being created because people are smart. They understand the power of diversification and they understand the power of compounded returns. And you combine diversification, compounding returns, alternative assets, tax-free treatment. It's where the smartest people. You look at Peter Thiel, who's probably one of the smartest people in the world. Why do I say that? I don't care about his political affiliation. He was the first investor of Facebook, one of the first investors into Palantir, and one of the first investors into PayPal. Those are three publicly traded, three of the most successful companies in the world. Go find one person that started all three of them. Doesn't exist. Okay, maybe Elon Musk. I would put Peter Thiel up with Elon Musk. Maybe Warren Buffett, but Warren Buffett generally didn't start these companies. He just invested in them. Peter Thiel, like Elon Musk, actually started them. Guess how he did it? He did it in a Roth IRA. Okay, he was the first investor into Facebook. He put $500K in a Roth IRA. Turned out into almost $500 million. Okay, he put $2,500 into PayPal. Turned out into $26 million. That's how you get rich. Smart people are doing this. They're just not broadcasting it to the world. I'm trying to. Let's do some questions. Okay, I'm going to go through, there's a lot, so I'm going to go through a few over the next 10 or so minutes. What are some of the most common mistakes you see investors make when they first start using a self-directed IRA or solo? It's a good question. Hopefully they're not IRA financial clients because we make sure our clients understand the rules before they start. But I think it's really, and I don't want to talk about any competitor, but I can't tell you how many people come to us and they move their IRA to us because they're stuck in these asset valuation fees, meaning they're working with another self-directed IRA company, getting charged 1% of their assets. So they started their self-directed IRA like 6 years ago. It was 80K. So they're like 1%, okay, $800, even though that's, I think, super expensive. They're like, whatever. And now that money, that 80 grand, 8 years later is worth 200K. And now they're paying $2,000 a year. And they're like, wait, I'm paying these guys 2K. They don't do anything. I don't ever call them. They don't pick up the phone. They don't know anything. I made the investment. Why would I pay them $2,000? So they move to us because we have flat fees and it's under $500 a year. So I think those are the mistakes, not understanding fees. Leakage from fees is a major, major obstacle to generating wealth because every year you're just getting leakage for no value. It's not like they're giving you investment advice. Okay, 2, if inflation keeps rising, how do alternative assets inside these accounts help protect my long-term retirement savings? Well, inflation means that there is a bubble, right? And that the value of the dollar loses its value on a continue going forward basis. So you want to buy hard assets that will retain their value in inflation. Okay. Assets generally like gold or Bitcoin, where there's limited supply, or even real estate where there's hard assets. So real estate, for example, usually your rental period is 1 year. So you have inflation, you can charge more on rent. Generally, with inflation, the hard asset will go up in value too. So it's important in inflation to have exposure to alternative assets like real estate or Bitcoin or gold. Question 3, if most of my retirement savings are already in a traditional IRA or 401k, how easy is it to roll these funds into a self-directed structure? Well, it's simple. All you need to do, step 1, figure out what you want to do, right? And there's no right or wrong. You may like real estate. You might like private credit. You may like private equity or hedge funds, Bitcoin. Step 1. Step 2, you open an account with IRA Financial, hopefully, or another great self-directed IRA company. There's a lot of great companies. Don't get me wrong. I just think we do it better than everyone because of the fact that we not only set these structures up, we'll give you the customization, the tax consultation, the record keeping, the administration, and then we give you the consulting going forward, basically holding your hand through the process. So I think the most important thing is choosing your investment. Step 2, you set up an account. Step 3, we'll transfer those funds tax-free from your IRA or former employer 401k. It's easy. Step 4, you tell us where to send the money. We'll wire it, and then we'll handle everything. We handle all IRS compliance, record keeping, reporting, filings, tax filings. Like, you got to do nothing, literally nothing. Just provide us a value each year. And if you don't do that, we'll handle it for you. And just hopefully watch your investment grow. And that's the fun part. Question 4. Can you explain what a prohibited transaction actually looks like in real life? I'm worried about accidentally making a mistake. You're not going to make a mistake, okay? Why? Because there's very, very simple rules. The first two, forget about. You're not buying life insurance, and if you're buying a collectible, we'll stop that from happening. So now it's the third category of prohibited transaction under Internal Revenue Code section 4975. And that basically means you're personally benefiting yourself, a lineal descendant, or an entity you control. And before we send the money, we're going to ask you what you're investing in, right? You got to complete a short questionnaire. And based off those questions, like an AI formula, we'll know what you're doing. And we'll then tell you, hey, this could be risky. Let's talk about it. So based on our AI instincts and 15 years in the space, like we'll know if you're doing something wrong. Okay. And then obviously we're going to coach you and make sure you're not. But as long as you understand the basic rules and it's common sense, your IRA or 401k makes the investment, the income or gains go back to the investment. Don't pay IRA expenses with personal money, pay IRA, 401k expenses, investment rise with retirement money, and you're good, right? Just don't put the money in your pocket. It's bottom line. So the traditional institutions want to scare you and be like, oh, don't buy real estate in a retirement account. Self-directed IRAs are so scary. No, they're just trying to scare you. So you give them your money and you don't actually have diversification and don't actually get to explore the real riches of retirement investing. So it's easy, simple, nothing to be worried about and not scary. So I've never had a client have an IRA even audited, but thank God I've not even had an IRA, self-directed IRA client that was under IRS audit attack or had an IRA transaction investigated or even blown up. So the fact is, and again, shouldn't even be an issue because the privilege transaction rules are pretty simple. They're not scary at all, and we'll coach you through them. But there's actually no IRS like audit division for IRAs. It goes under your personal tax return. So SBSE, small business self-employed. So the only way you're going to get questioned is if you're over 73 and doing a requirement of a distribution, the IRS will be focused on the value of your IRA because that's going to determine how much requirement and distribution you have to send the IRS. So they may probe you and ask you what you're investing in. But to just randomly audit an IRA, that doesn't happen. So I would not stress about it at all. It's not even worth worrying about. What I'd be focused more on is what you're going to invest in and how to structure it, because there's other things to worry about, like UBIT, unrelated business income tax, or maximizing tax benefits, whether it's through a solo 401k, self-directed IRA, using leverage tax efficiently, things like that are more important and cause more headaches than prohibited transactions. There's another. Are there any fees for the paperwork required to conduct alternative investments or to move money? No, there's a setup fee. Like I mentioned, it's $495. It's a flat annual fee. You actually don't need to pay it until you set your account up, until you fund it. So no, we don't charge you to move money. We don't have transaction fees. In one IRA, you can have 25 investments. So you can have one IRA for $500. You can buy cryptos, gold. You can do real estate, private equity, hedge funds, private credit, all for $500, all one account, flat fee. Like, it doesn't get any better. Plus, we'll wrap around the consulting, the compliance, the record keeping. It's a no-brainer. Okay, that's why I'm like, I give myself a C-. I should have 1 million accounts. Like, it makes so much sense. These products sell themselves, but I'm going up against the big guys, the big bad traditional institutions. And I'm not say they're bad. They do good stuff, but they have billions and billions, if not trillions of dollars behind them. And they're not exactly encouraging people to invest alternatives. Thank God President Trump, the executive order is a great start. That's wonderful. No matter what you think of the president, the executive order makes sense. You should want Americans to have flexibility and control and have different investment options. That's good. You want to criticize the president on different stuff, go for it. I don't care. But the executive order makes sense, and having the ability to invest in alts, there's nothing more American than having freedom, control, and flexibility. And that's what the self-directed IRA does. Another question. I have a Roth structure. Okay, I'll get into Robs in 1 second. is my understanding that if I buy a rental property, that I cannot do any active work in the property. I'm receiving a paycheck from the C Corp. Can I act as a property manager? Okay. So ROBs are a rollover business startup. And remember I mentioned the prohibited transaction rules. So if you bought real estate in an IRA or 401k, you wouldn't be able to do any personal work. And because 4975C says that. But 4975D as in David gives you all the exemptions and the exceptions to the prohibited transaction rules. And there's one under D13 that allows a 401k to buy stock in a company, which is called qualified employer securities. Anyways, simplify everything. If you do a ROB solution, which I've written a book on, and we're one of the leading providers in the country in the ROB solution, there are ways that you can invest your retirement account in a business like a store, a restaurant, even a real estate business, and actually do hard labor and work in that business, earn salary without triggering the prohibited transaction rules. So yes, you can do that in a ROBs, but not in an IRA or 401k. Here's a couple more. Is it really safe to invest in alternatives inside a retirement account? What protection or rules should I be aware of? So listen, the type of account, it's called self-directed. So you're in charge. I can't tell you what you should do, right? That's not American. You're in control. Is it safe? Well, I don't know. You obviously need to feel comfortable with the investment. I think it's safe. I've invested in self-directed. I've invested in almost, every type of self-directed IRA investment. I believe in alternatives. I don't feel scared when I buy real estate. I can actually drive down the street and touch it. I get more scared when I'm buying Nvidia, to be honest, but that's just me. I feel safe when I own gold, cryptos, when I can actually understand what I'm buying a private business and I understand what they're selling. So I don't think alternatives are scary. I think just blindly investing in the S&P 500 is scary. I don't understand why markets go up or down, right? Stock market drops 700 points because the economy is doing well, and interest rates may not drop. Interest rates may go up, so the stock market drops. That doesn't make sense to me. That's stupid, right? Why should my stock go down if the economy is doing well and interest rates are going to not go down but go up? Like, I don't get that. Okay, so, but not to say I don't have exposure to stocks. I do. I think it's important to have exposure to stocks, but it doesn't make sense. That's scary to me. Buying real estate's not scary. That's safe to me because I can drive by the house and I know what I own. And I know I'm getting rent and I know who lives in that house. And I know the person and I trust them and they're paying me rent. So I'm happy. Same with gold. I know where the gold is. It's in the depository. I know it's there. It's giving me comfort. That's good. I love alternative assets. And that's why I'm in this space. I feel comfortable, safe, and secure with alternatives. But I'm not every person. You may be scary. You may be scared buying a private equity investment or investing in a neighborhood restaurant or a neighborhood AI company or a neighborhood distribution or consulting company. I'm not you, but that's what makes America great, right? We all can do anything we want with our IRA or 401k, except life insurance, collectibles, and any self-dealing stuff between us, a lineal descendant, or an entity we control 50% or more. So no, I don't think alts are scary. I think they're amazing and fun and safe for me. Okay, last question. Can you talk more about checkbook control? How does it actually work in practice? And is it better than using a custodian for every transaction? Okay, I'm a big checkbook control person. I have a self-directed IRA LLC. So what's checkbook control again? Okay, all it means is it's a self-directed IRA, and instead of the IRA buying the real estate directly, so the title would be IRA Financial Trust Company for the benefit of the Adam Bergman IRA, my IRA, my self-directed IRA, will invest in an LLC. Let's say I name it, I don't know, Blue Wall LLC. And Blue Wall LLC will then buy the real estate. So from a legal standpoint, I have limited liability protection. So God forbid there's a problem with that real estate, no creditor can go and get anything outside of that LLC, right? So if I have other money in my IRA, all they can get is what's inside the LLC, which I'll have insurance for, and I'm not going to keep that much cash. So I'm good. And I'll have privacy because it's going to be harder to see who owns Blue Wall LLC. And it's easier. I'm the manager. I have checkbook control. I can write a check to pay Paul the plumber or Charles the contractor. I can do all that stuff. I don't need to go to IRA Financial to do that. So I think if you're doing an investment that has multiple transactions like real estate or maybe doing a lot of lending or you just want privacy and limited liability protection, like you can't, it's just a cost, right? The checkbook control is $9.99 setup one-time fee. So, and that includes the state filing fee, the operating agreement, the EIN. Like, trust me, we're not making much money on that stuff. So it's a one-time fee. If you can pay it, it makes sense. I think it's a no-brainer, but doesn't mean it's a requirement. So if you're just buying a piece of raw land, if you're doing like a one lockup investment into a private equity fund that maybe is going to last 10 years, and you don't care if someone knows you're using your IRA, or maybe you're just buying gold, or maybe you're just buying cryptos where you can do it directly on our great platform with Bitstamp and Robinhood, then you don't need the LC. Okay. But the LC is great if you're having different investments, you're trying to aggregate all your investments in one spot, have more control, flexibility, then and limited liability protection. I think it's a great, great option. Not required in any context. I'd say our accounts are probably like 60-40 self-directed and then 40% LLC. I love the LLC personally. I just think it's great to have the control, the flexibility, and you get the limited liability protection. And because the LLC is a flow through, it's a tax nothing, so it doesn't pay any federal income tax. Although some states like California have an $800 minimum franchise fee, but most of the states have a very, very low annual fee. And the good news is we have a service. We'll take care of like the state annual reports, any tax returns, and the like. And even if there's federal tax returns, if you have an LLC with two or more IRAs or two or more members, we offer partnership tax filings. We actually also offer corporate tax filings. We actually do UBIT 990T tax filings. So like we're a full service shop. We're not just a great self-directed IRA 401k company. We're also basically a tax firm. We're actually going to start doing some estate planning in the coming 2026. So we're trying to expand our services to give everyone more quality tax-related services so you can be a better, smarter, and more tax-efficient investor. That is the name of the game. Obviously I mentioned this, like it's important choosing the best, smartest self-directed IRA custodian. I think, that's talked about this and addressed this in a question. What's the biggest mistake people make? It's all these three. Like fees matter. You need to choose a custodian that actually knows what they're talking about and not going to say every time you have a question, go fire and hire a lawyer, hire an accountant. Like that's ridiculous. And then the ongoing support. Ask these custodians, do you offer annual compliance? Do you do the tax returns, tax filings, tax consulting? Is it all included? Do I have unlimited access? The answer with IRA Financial is yes. The answer with everyone else, no. And that's just the truth. And again, I think there's a lot of great self-directed IRA companies out there. I don't want to disparage any of them, but I think IRA Financial does it better. And I think our success speaks for itself. I've written 9 books. I'm working on my 10th. That's almost finished. I should release it in early 2026. And it's going to be a good one. It's going to be exciting, but a new kind of product and a kind of a new relaunch of the IRA Financial self-directed IRA product. So that's going to come in the next several months. But again, IRA Financial, I don't want to say it again, but all I'll say is this, listen, I don't know much about a lot. Like I barely can open my Netflix. My kids laugh at me. I barely can charge my iPhone. But when it comes to self-directed investing, there's no one that knows this stuff better than me in the country. Not because I'm so smart. I've just been focused on this for 15 years. And when you add my law degree, my master's in tax law, and my legal experience, no one has it. It's just a fact. You can go to every other competitor in the space, and there's some lawyers out there, and there's some super smart lawyers. They haven't worked at large law firms. They don't have a master's in tax law, and they haven't written 9 books. Okay. God bless them. They're great people. I love them. But I just feel truly confident, and I truly, just, I get upset. Put it this way. Every time I hear that a client went to another, I speak to our sales team and I'm like, hey, what's going on? And they're like, oh, we had X leads and like, we got these clients this week. I'm like, wait, why didn't you convert all of them? And they're like, well, I guess we didn't get them all. I'm like, I honestly take that personally because I'm like, why shouldn't they choose IRA Financial? Like, we're the best. We truly are. We have a great fee model. It's flat, great service. We have the expertise, great platform, great people. Like, there's no one better. So I get we can't get them all. Just like, not everyone has iPhones and not everyone uses OpenAI and not everyone has Nike. Some people like Adidas or so I get it, but that's how much confidence I have in what IRA Financial is all about and what we do is I literally take it's personally when someone doesn't use IRA Financial. So hopefully you'll consider us. Hopefully you'll enjoy working with us. I know you will. I know you will. And if you don't, you better let me know because I'll make sure that changes. And again, I'm always around to personally help people. I'm very easy to reach. And if you're a client, you'll know how to reach me. So here's just opening the account. I'll just end with this. I talked about it. Step one, you basically just got to choose what investment you want to do. We'll help you choose the account if you can't figure it out. You open your account, you can do it all online. You can call us if you need help. We'll walk you through it. You'll give you your account number and we notify you by email, by text. We'll then transfer and roll over the money for you tax-free. We'll notify you when the funds hit, and then you'll tell us where to send the money. We'll invest it for you, and we'll handle everything. The record keeping, the administration, the custody, and all the boring IRS reporting. If you need to make contributions, take distributions, RMDs, we got it. Conversions, we'll do it all for you. Okay, I promise you. You're not going to do anything. It's all built into our fee. We're not nickel and diming you for anything. I promise you. Yeah, we got that Black Friday promotion. I'll mention that again. It ends November 30th. I hope everyone has an amazing Thanksgiving. I hope people get to spend a lot of precious time with their family, eat well, sleep well, enjoy your holiday, drink well too. I'm planning on doing that with some nice bottles of red. I hope you guys have an amazing holiday. Schedule a free consultation. Literally doesn't cost anything. 800-472-1043. Info@IRA Financial. If you just have questions, you're not sure you want to do this, there's no cost. Okay, we'll talk to you. You can chat us, you can call us, you can set up a Calendly. As I mentioned, I love my team. We spend every day going through different types of questions, different types of scenarios. So my team is just as smart as me. They're better looking, probably smarter, but we learn from each other, and we always push each other to learn more. We stay current. As I mentioned, there's some current legislation about fiduciaries and litigation risk for 401k. So I can promise you, if you stay with IRA Financial, you're going to stay current, you're going to stay updated, and your plan's going to stay compliant, tax efficient, and you're going to maximize your retirement and self-directed benefits. I promise. That is my promise to you. I'm going to stop sharing. That's it. I hope you guys enjoyed the webinar. Happy Thanksgiving, happy early holidays, and I hope I'll see everyone again soon. Thanks again, and have a great rest of your day.